Hey, Dave Knight here, 123 Day Trade. Thank you. Hi again. I think I'm live now. If I am not, anyway, Dave Knight here from 123daytrade.com. Thank you for being here today. We are going to take about a minute or so for any stragglers to come in. Yeah, I cut myself shaving a few days ago. That's how I was asked on one of my videos by email. Hey, what's that mark on your face? My wife sliced me right there. No, I slipped with the razor, and it was on the my banquet, not my banquet, but my son's banquet in the football. So, needless to say, that was a lot of fun. So having to, hey, what's that mark on your face? So it was brand new at that point. Now it just won't heal. Anyway, happy Thanksgiving coming tomorrow. So happy Thanksgiving ahead of time. Anyway, so let's just take another minute and then we'll get started, all right? Just arranging things here where I want them. All right. So we're going to be talking about waves or wave theory or the wave principle and how it relates to day trading. So that's kind of our topic of discussion today in our Futures Day Trading Beginners course. This is lesson number 3. Yeah, we're 3/4 of the way through right now, 75% through. And before I start, are there any questions right now? Let me give you a couple seconds. All right, I don't see anything right this point in time. All right. All right, well, let's get started. Let's get moving. I'm going to go to, I have a very short PowerPoint presentation, and then we're going to go to the chart. So let me share my screen. Hopefully I'll do it right this time. Share screen, yes. I want to share this one, screen 1. And let's see here, share. And then I say present to everyone. All right, you should be able to see it now. Just let me know. Yes? Okay, cool. All right, so here we are. The wave theory creator, Ralph Nelson Elliott. He lived between 1871 through 1948. People have called it the wave theory, the Elliott wave theory, the Elliott wave principle. The wave principle, it's been named a few different things over its lifetime. Let me get rid of this right here. But regardless of what it's called, it's still pretty much the same thing. The market moves in waves, up or down, depending upon which side of the market you're on, and you can count them. At least I believe you can count them. It's all in the eye of the beholder, really, when you're looking at stuff. But in hindsight, it always looks right. But when you're in and you're trading on that right edge, it can be a little bit different and a little bit more difficult to understand where you are in relation to, let's say, a wave count or the wave theory or wave principle or whatever you want to call it. Anyway, the wave theory, as I like to call it, was created by Ralph Nelson Elliott, like I said, between 1871 and 1948. So what I'd like to talk a little bit more about today is basic wave theory, price action forecasting, how you can actually try to forecast out using your daily chart. You can actually forecast where you can see next resistance and next support. It's a forecasting tool that I use that hopefully you can use as well. And then we're going to talk today about the sweet spot of the trade. So the sweet spot of our wave theory. So that, or the wave principle or Elliott wave, however you want to call it, there is a sweet spot in the trade, and that's what I try to capitalize on. All right. This is Wikipedia. You can read to your heart's content. But like I said here, the wave theory or principle, it depends on who is telling the story. So in this particular story that's on Wikipedia, they call it the Elliott wave theory. It's been called many different things over the years, but regardless of what it's called, it still has the same basic characteristics. And what we're going to look at right now is the basic pattern that you see on a long signal. And if you would flip this or reverse it and invert it, that would be exactly the same as looking at it from the short side, so, or a sell side. So it starts with, although it's not listed, right here is your, whoops, let's go back one. Right here is 0 point. Forgot you can't click on PowerPoint. This is your 0 point. Here's your 1, 2, 3, 4, 5 going up, and then the correction wave. Now notice that it's called impulse and then correction. So that stays standard as far as the wave theory goes. You have your impulse part of the wave, and then you have your correction. Think about the beach. Last time you were at the beach and the wave comes in, there's like these normal waves, and all of a sudden you have this big wave that'll come in, and it reaches a little bit higher than all the others. That is kind of the way, and then the wave crests at a certain point, or you think about it, that's one wave. Then you have a series of waves behind that. So let's say there's 3 waves coming in. You have one wave, and the second wave goes a little bit further, and the third wave goes a little bit further than that, and then they all come back and go back out to sea, right? So that, in a sense, is the wave theory as it relates to the beach. If you can think of that example, and I've brought in Bruce Lee quite a lot, hopefully inside this trading, and be water, my friend, right? So the water always seeks its level, and so the market will trade. It'll go up, it'll go down, but it'll have a correction period in it as well. So there's 2 sides of this. There's the impulse side, and then there's the correction side. So determining where you are in the overall wave count can be helpful, but not necessary as it relates to day trading, because really when it comes down to, it's knowing your signals. And I like to look at what's called the sweet spot. So the sweet spot on this chart here that you're looking at is in between the 2 point going to the 3 up to the 5, so the 4 and the 5. This is where I'm looking. If you notice, a lot of times I'm coming in above the 1, or I'm coming in somewhere between where the 2 is and the 1 is. So the way you see the 1, 2, 3 that I trade, this is your 1 point, here's your 2, here's your 3, and you notice that I'm getting in right as this market comes over here a little bit above this, and I'm riding it, or I'll come in here somewhere and I'll ride it up, depending upon if there is a signal. And this is the higher high is higher than some of the waves that are the minor waves that are going inside. It's easier maybe to see inside a trade, but just think of this market right here. There's no right edge right now, okay? There's no right edge, and so this isn't known. Everything beyond here is not known. What we do know is that we have our 1 point established, and we're inside this move right here that's just established a 2, and we have this move. So what we have is price action showing this up here, but we don't know where we're going at this point, but we're inside this line right here. This right here, this line right here is your trading line. This is the line that you're going to make your trading decisions off of when you're coming into the market, and how I view it as a day trader. This is the market, and this is the move, and you can take a trade anywhere up through this mark here before it crests, and then it moves back down. So you'll see me sometimes I try to get in at this point, but sometimes I miss, or it moves through, and then I get in at say 1p, and then I take it up to 5, 6, 7, 8p. You know, there is an opportunity to get back in. That's also another way of being able to scale into the trade as well, and that is for future courses that we go through intermediate. More specifically, scaling in is more of an advanced concept when you're trading more than multiples of 3. So scaling into a trade. So what we're going to do right now is, like it says, let's get to the charts and let's go to the charts. All right, so let me find the chart I'm hunting for. There it is right there, and let me blow it up. All right, so what we're looking at here is where we left off last time with 1 week's more worth of data on our daily chart. So and just let me double check to make sure that you're seeing what I see. Good. All right, so we're good. And let me just do one more thing because I want to make sure that everything is being seen. All right, there we go. So here we go. Let me get just one drink here. All right. Now, one of the key concepts that you see me put on the chart sometimes is the Fibonacci extension and also the Fibonacci retracement. Its basis is involved with the Elliott wave, and in fact, Ralph Nelson Elliott, even in his training and teachings, talks about the the Fibonacci's inside of the wave theory. And sometimes a better way of seeing it is actually seeing it applied to the chart. What we're going to handle right now is what I would call price forecasting. So what we do is we put on this tool, is called the Fibonacci extension, and we go against the lowest low. We come up to what ends up being our 2 point. We come down, or this is our 1, 2, 3, right? But this would be the 0, 1, 2 in the wave theory. Here is the lowest low of the correction. I mean, of not the correction, but of the impulse. So here's the 0 point. Here's the 1 point. Here's the 2 point. And so right now, what the market is forecasting, see up here at the 0, at the 100% line, it's forecasting that this wave, if this wave is going to work, is going to move up to the 52.23 range right in here. So let me get like a little arrow here, so hopefully you can see it. So our wave is thinking about moving up through here. Let's see if I can get a line, diagonal line. Not exactly what I want it to do, so let's get rid of that. Trend line won't, well, trend line will help us to a degree that I can show you. So what you're seeing is kind of an ascension like this, and I want to blow this up just a little bit more so you can see it. So what we see, if we could see right edge, is what this would be a move. So here's your 0, your 1, your 2, or as I like to look at it on my trading charts, this is a 1, 2, 3, and the signal is in here to get on the long side, and then we're expecting the market to move up through here. So 52.23. So basically, if you're looking at it from 53.23 to current price action right now, 43.04, before the next major correction, if this is a valid signal and move, before this one would come back down again with the impulse side of it to form the next side of this, we expect the market to be able to get to 53.23, and then it'll come back down, and then it'll make maybe its next move, or it'll make its correction move. Or this might be just the extension of 1 point, and it'll be up here eventually as a 1, 2, and a 3 later on. That's what the crazy thing about wave theory is. There's so many different, it's like an economist right now. If you put 100 economists in the room together, you're going to get 100 different viewpoints about what they believe is true about whatever's going on in the economy. This is the same thing about wave, but the principle stays the same. You're still counting what you believe. And the value line or value level right now, if you were looking at value line, you'd be looking at getting long above here. This is maybe a day trader looking to this would be, or that might be a point that someone would be looking to add, or they're looking to add, say, right in this area. They're looking to go long in this area, and then they're going to scale into the trade up through here so that they can drive it up to this top point here, and then maybe they get rid of a bunch of trades, and then they're only scaled down up here. So the point being that you take on your biggest risk at the beginning, and it's kind of like if you think of a pyramid shape is how you want to think about scaling. So that's how I believe, and this is a little bit more of an advanced concept, but when you're scaling into the trade as a day trader, you want to scale in your biggest position, and you want to decrease your scaling as you move into the trade, not increase it, because that is a very unsafe, an inverted pyramid is going to tip over. But the pyramid is the most strong, it's the strongest structure known to man, right? The pyramid shape. So if you think about that as it relates to trading, that is how you end up with a good scaling plan. And that's something that, I guess that's a golden nugget for you that I'm thinking about right now. And I wanted to add it into just the beginning course. So, because a lot of you guys are thinking about going from one contract to two contracts. You want to, when you're scaling in, you want to, that two contracts should be, your biggest position should be taken right there with your entry point at two. You shouldn't be scaling in one and then one later on. When you start thinking about scaling plans is when you got three, right? You scale two in, you come in with two and then you scale one in. So now all of a sudden now you're building that pyramid shape. Or if you think about like a bowling alley, right? The base down behind it is the five, was that five or 4, 3, 2, 1? Yeah, 4, 3, 2, 1, right? So there's 4 pins, then 3, then 2, then 1. So that's kind of a good example of how you scale into a trade. So 4, 3, 2, 1, you've got in 10 trades, but you scaled in. You scaled into the trade, but you're not taking the biggest position on at the beginning. So at the beginning, that's what, you take your biggest position at the beginning and you scale into a trade with your weakest position at the end. So if it does go against you, hopefully a 4 and a 3 is at profit, and the 2 maybe is at profit, but the 1 is not, that 1's not at profit, and it comes back, and maybe you have 3 that are losing and then the other 7 win. So that's kind of scaling in a nutshell. As I like to say in a nutshell, and I always think about Austin Powers every time I think of scaling, but this is price forecasting. Right now, you would have a plan of how you would bring in your, say, 10 contracts, and that's kind of the overall goal of my trading course, intermediate and advanced courses, as we get to it, is how to scale in 10 contracts. So so that you can take advantage of a move. And as a day trader, you don't get a lot of times where you get to scale in 10 contracts in any given day. This is more of a positional trading strategy. This is where I came from in the very beginning. Or swing trading, you can scale in on swing trading. So it's kind of more of a concept that it more relates to positional and swing trading. So hopefully that helps you. Now you can also look at this on the reverse side, right? So we've been in a down for an awful long time. Let me get rid of some of these lines here. Let me delete this trend line. Let's get rid of this line. And what we're going to do is we're going to price scale this on the other side. So let me get rid of this. And then we want to move this over. And then I want to take the auto scaling off my charts so that I can move it. All right, so now I can move this up and down. So what I want to do is look, once again, I'm looking for my 1, 2, 3 in relation. Now I could go back here and really look a little bit further, right? I mean, the market really, really, really moved up. This up here, I believe, is the high of the crude oil market as an overall. But if I would go all the way back here, this is not equivalent to being able to really help you as a day trader. So what we need to do is look at our charts and look at the nearest high before the last correction that went through. So in our example, this was the last up move right through here. Here is the correction that went in, and then we had our downward movement, and then we see this was the last time it went down, right? So here's your down. I mean, you could scale this in, but you would have to use your weekly. This is how you would use your weeklies to be able to look at this. So if you wanted to look like how far can the crude oil market come down, well, you could look at it this way, right? The price forecasting. This is just strictly for just to see it, but this isn't going to be very helpful as a day trader. And what we do is we have to go back here. So you'd be scaling it from here, like from here up to here, and all of a sudden you see it made its move right here, right? So this was 100% at this point. So this was what you were looking at now. It's a tool that helps you to the degree that, you know, obviously this market moved and it continued to make its move down throughout this time period. So as you scaled in, I mean, there was a lot of money that was made on this downward movement that happened between right now, August, looks like September 2nd of 2013 to right now. This is a big move. I mean, it moved from roughly $40 a barrel right down here to the $37 a barrel to the high of 111. I mean, there's a lot of money that exchanged hands on this way down. This in itself doesn't really help you though. I mean, this doesn't help you as a day trader is what I'm getting at. So what we want to do is go back to our daily chart, and as we price forecast out, we want to look at just the time period that we know. So our time period that we know is right here to here to here, and then we're looking at this down. So let's go ahead and use our extension here. And what we want to do is use this as our 1 point, our 0 point, excuse me. Here's what we're doing is we're price forecasting the down. So look at that. Is that right on top of it or what? So the price forecasting forecasted it to where it was going to go, and then now will it scale down further from here? Who knows? But it shows you where we are and where we could go down. So it went down and it bounced right off of the $40 a barrel, and that was kind of the price forecasting. And you can see that the power of the tool that goes with this. And here's your theory. So where can we go from this point? Well, obviously you can go back here and look. This is where we were. So this would be a point that we could go back to. All right. Or we can scale back one more time, right? So now we've reached down to here. Where can we go from this point? Well, what we can do now is we can scale back to this area or to our last correction area, which would be right here, right? So this would be the correction area that you're looking at. So that told you kind of where we can go on like a minor level. Now this would be a major level of where we can go now. So what I want to do is we're price forecasting into the future on the short side. So we're looking at the highest high that we have on this movement. We come down to the lowest low that we see, and we come back up to the highest high on the this would be an impulse side, right? And now we can see that we can forecast where the market could go in the future. So if we get our handy dandy arrow out now, all of a sudden now we've got our price ranges that we believe the market could go up or down. So remember, this up here, this arrow that I put in the charts was the upside arrow going to 53.30, and here's your downside arrow. The market could make its move all the way down roughly to 35.58. Once it gets done correcting right here, the market can make a nice downward move to, right now it's forecasting 35.58 area. So now we have our price theory that's moved into it. So, and this is wave theory. So it's forecasting where it's going next. And like I used that trend line, we can use the trend line to see, whoops, I didn't mean to do that. Let me draw that back out there again. Oh, there should be an undo button here somewhere, but there isn't. You hit that X and everything goes bye-bye. So, you know, the T4 platform is awesome to the degree that I like it, but there's some things that I would definitely would like to correct for it. So here we go. So we have our 35.58. We had our arrow up here at 53.30. Now we're drawing our trend line to see how this can move downward to the area that we're looking for. So what we want to do is draw a trend from here to the last higher high, and here is our trend line. We just need to move it off the right edge, right? So to stay inside the downward trend, and now you see something a little bit differently, right? So now we know what we really are in. This is the downtrend that we talked about. See how the moving average crossover started kicking in here, and we talked about that on the daily chart before. Now we see as day traders that the market's going to have to move above. Let me blow this trend line up a little bit here. The market's going to have to not only move above here, but close above this area to confirm that 53 level is doable up here, the 53 level. So our correction right now, with all things being equal, could bring this market up through here or above this area, but not close above it. So the close above could let the longs know, hey, wait a minute, something looks like the crude oil market's ready to go the other direction now. But right now, as you look at it as a overall trend and as an overall wave, we are in the sweet spot of the trade as it relates to the trading right now. This is the 2 going to the 3 point. So the 0, 1, 2, or what I like to 0, 1, 1, 2, 3. We're in the downside trade. So right now, I would firmly believe that we would see, as long as this trend line holds right here, we will see 35.58 before we see 53.30, as long as we hold our trend. So this is price forecasting. But we can make a move all the way back up through here into right now, looking a few days ahead, the market could be at 43.24 in the near future and still hold the line. So we could go up, we could go sideways, we could move up a little bit higher. But right now, what we see as the market is in a firm downtrend, and our overall targets is making a move, and we can see that we can make this move all the way down here to 35.58. Will we go below that? Well, I don't know. That would be something that you know, this is just forecasting. That's all it is. I wouldn't be able to tell you which way the market's going to go. I mean, it's hard enough taking a trade on a daily basis and then trying to make your decision. But this is why right now in current market conditions, I like to take the short though over a long signal, and that's why you see this. Okay. Alrighty then. So our basic wave theory is what it relates to, and then we kind of drill down, right? So what we want to do is drill down to your 15-minute chart or the hourly. I like to look at 15-minute and then move down to the 5. So all of a sudden now we see things a little bit different now as it relates to the 15-minute, and we can, knowing our daily chart, what we want to do is only concern ourselves with the Fibonacci extension on the short side right now, because that is the only thing that is valid with current market conditions that we're in. I mean, you could look at it on the or kind of a counter trend move basis. So, and I think I still have it off, right? Okay, good. So where's our 100? I think this was the daily chart. Let me get rid of that. Okay, I got rid of the another Fibonacci extension, but I wanted to show you this one. So here's your 100% line right here. So right now on the drilling down to where we are right now, we can see that we can easily make a move back down here and below the 41.49 on the 15-minute chart. Now our 15-minute chart, this is a movement that might take a day, might take a week, might take a month, not usually a month, but it might take a day to a week usually, and you're looking at the 15-minute chart. So, and how we can see it, how it can ascend or descend to it would be taking and now we've kind of looking above, it's actually moved a little above right now, but let's just take a look at when it crosses back under, it'll be more of a powerful short signal again. So here is your trend line, and we have today crossed above it. So will it close above it? Will it come back underneath it? Well, once it comes back underneath this trend line, all of a sudden now it's a powerful signal, and what we see is the market that's making the 1, 2, 3, and now we see that we can make the sweet spot of the trade in between, say, this trend through here. You would be able to, if you could find the valid signal, you could pick it up at, say, 42.69 and run it down to 41.51. So that would be a nice 111, 112 tick move that could happen, making its movement down, price forecasting where this can go. So this is the power of using the Fibonacci extension inside your wave theory to help you determine where price could go. And then you have your trend line that helps you determine where value could run in at some point to be able to take that trade on as a day trader. So what I want to do now is drill down one more chart into the 5-minute, and let's get rid of the Fibonacci extension just in case it pops up again. We want to get rid of it. So now, and let's get rid of this trend line. So now we're going to see a picture at the 5-minute. Whoops, that's 1 minute. A 5-minute chart is going to give us a completely different look, right? So now all of a sudden we see a completely different look, and we actually see, for the first time, we see that we actually have a crossover of our 200 line against our 50 line here. And we have to look back right around here to see that we have been above it for, when did it cross back under? Right here. So it was November 23rd at 7:40. So basically this whole week we have been trading in an upward bias since Monday going into today's trading, right? And this what is, makes it hard, by the way, and this is probably one of the reasons why that it makes it a lot harder to trade, is when you're in a correction mode, because you don't know how long the correction is going to move on, but you're still looking to take trades as a day trader. So there was a nice signal yesterday with the volume that kicked in, and today I didn't see really any good signals as it relates to that. But you could see that we looking at just today's area before the inventory report came out, we can see we got our high right here, and if we look at where we opened and where we made our low, what we can do is actually what I did, I guess another way of looking at it is forecasting what I believe was going to happen this morning, which didn't happen. But so I come down here to determine what I believe could have happened in the day's trading, right? So and here would be the line that we would hold to get here. Let me go back to the trend line again. We want to take it off this point right there. So here's the line and we open up pretty good, right? 845, come down, and then it makes it looks like it could make its move and reach down here to 41.39. Right here is where you see the market making its move to go back the other direction, right? So here is your 930 mark. This is where the inventory report comes out. We see the close above. It starts to make its move, and all of a sudden you see this nice upward correction move that's in the market right now, where the close above negates the short side of the signal right now. And on the 5-minute chart, it's something that I personally should be able to use better as a day trader. But when you're in the heat of the battle, sometimes it's hard to remember everything. But remembering where value is as it relates to your trading can really improve your performance as an overall trader. To know if it's above this, that it's better long than a short on the 5-minute chart. So that way, if you know where the value is in the 5-minute chart, you can go back and you can look at what we wanted to bring in today, our tick chart. So now we're looking at the market as it relates to ticks. So I told you that we were going to bring in the tick chart today, and here we go. The day today was Wednesday, and the inventory report came out, and now you see some things on here that we won't talk about right now, but this is volume and this is Williams percent R, and we got our highway in here. We have our Bollinger Bands that make up the highway. We have our settlement line. We have our 50 bar SMA right here. We have our 200 bar SMA. There's a lot of things on here on this chart, but the basics still stay the same. We are looking for a wave to be able to get involved in the trade. And today's trade would have been to look at this mark right here against the S1, which we're going to talk about support and resistance on our next video that we do in the beginning course. So let's not get into why this is a valid setup. Let's just talk about the extension itself right now and how we can price forecast where this movement could have went to, right? So when you're drilling down into the trend line, the Fibonacci extension that you use isn't as helpful as you can look at it on the 5-minute chart. So what we can do with it, though, is we can see where our trend line should be holding, right? So if we drew our trend Trend's your friend. The trend should be not there, but over here. Get rid of this. Here's your 0 point right over here. We'll use this as the trend. It made a double bottom. And this would be your 2 point. So this would be your initial extension that you would use. Well, actually, your extension, you wouldn't be able to use your extension until this point formed. So this would be the initial area where you're trying to get involved in the trade. Let me reframe what we're trying to do right now. So our 50% mark, and this is our sweet spot, trying to get in between. A lot of times we're getting above in this case would be the 4208. So the value point would have been at 4210 or lower, depending upon if you could get in the trade or not. So you had an opportunity right here at 4202. So the get long today on this signal would have been to get in at 4202, in between that and in between the 4208, so the 4210. So that would be your initial trade that you would be looking at today, all things being equal, looking at volume as well. And then the short side of the call would have been below this green line, which is S1. And using these two bars right here as equals, you'd be able to look at either side of this market and bracket it to either go long above or short below. And if I would follow my own advice more times than not, I would win a lot more money. So follow what I say, and sometimes don't do what I do. So that's what makes other traders better than me, because I get caught up in the emotional side of trading sometimes, and I thank God for Top Step Trader and the max daily loss, because it has saved my ass on many occasions. You know, that in 30K, the $500 max daily loss saves my ass, because I know that I can make up $500 in any given trading day if I hit a 6P target. With current market conditions right now, a 6P target, by the way, would give me 126 ticks. Now, this is a lot more information than I normally share. Then that's because I've got a Black Friday special coming out, and that's why I wanted to share a little bit more information out with you, because I've got 3 people that I'll be looking at for to take to that next level as we make this next move up through here. And when you're looking at trading, you've got to start somewhere, right? So I firmly believe you got to start with just one contract. If you can't make money with one contract, you shouldn't be trading. And in the very beginning of time, you need to be in a simulated environment. I would recommend at least 30 days minimum, up to 90 days. I would really recommend that you would be with Top Step Trader, like I am, using the T4 platform, so that if you do decide to go on one-on-one coaching with me, that we're looking at the same charts, we're looking at the same data, we're looking at everything the same. And then if you want to go back to Trade Navigator or Ninja Trader or any of your other favorite, trust me, I like them all. I mean, but the T4 platform at Top Step Trader is free. That's why I use it. There's a lot of things that I wish I could improve upon it. You know, if it was up to me, I'd probably still trade on Trade Navigator. I love their platform, but there is enough information on here that you can make a good movement, or excuse me, good price action movement. You can make a good calculated what am I trying to say here? You can make good calculated price action and trade signals based upon using the T4 platform and using my full trading strategy. And that's kind of what I want. That's it. That's where we're going with it. We're going to be taking this to the next level as it relates to making that next movement and taking your trading to that next level. So anyway, so that's kind of a side shoot that I wanted to talk about. So now we're here. Now you can see something right now, right? You can actually price forecast out a little bit further with, if we didn't know what's going on the right edge right now. Let's, for instance, if this market was over here to the side, and this was the current high right up there before the retracement started happening, all of a sudden now we've got some more data that we can work with, right? So what we basically do is wait for the market to make its correction and movement. And this, you would be looking at here and then down here. Notice that this is where it ends up being. So now all of a sudden, now you can look back on the day side of this, and you can go through your extension again, and you can forecast out again where the market can make its next movement. So what I want to do is bring this over. So now we forecasted out, and this is kind of that scaling thing that we talked about, right? Our biggest position would be bringing it down here at the 42.10 level, right? And this 42.02 to 42.10, like we talked about. I have to move it over a little bit further. So right here, 42.10 to 42.02 would be where we would put our biggest position on. And then we see that we have an opportunity right here to scale into the contract at this level. So if this one would lose, we'd lose one side, but we'd win the other two side if you just had three to go with. So we would scale in two here, move another for your third. This is where you'd make your first scaling attempt, would be right in this area right here. That's what I'm getting at. You could make it anywhere between here through this line above here. So the best place to scale in would be above the 42.29 level. So here at the 42.31, you can see I have a little move where you see the X right there where I wanted to get in right there, right? And then it stopped me out coming back down this way. But this was where the market saw value today, and this is where the market saw that we made this move. I mean, it had a correction, it came down. By the way, the 1P mark today was at 42.23, so you stayed in it, by the way. It came back down here, so zero at 42.02, 42.23, you stay in right here, and the market continues to escalate and make a nice little movement here. So it goes up here. So that is the Fibonacci extension and how you can utilize it inside your price theory, and using that as it relates to your trend line to start with is moved as time goes on. So all of a sudden, and that's why I use, instead of using a trend line all the time, that's why you see this 200 line in here right now. This 200 line, as we talked about last time, helps me stay in a trade that's making a nice movement. And this right here would be a possible exit point right up through here. But knowing that pivot was above here today, this was a trade that was worth roughly 3p today. So a 3p trade today. Obviously, I didn't catch it on my Top Step Trader side, but I caught it on anyway. That's neither here or there. We're just talking about the FTP and whatnot right now. So 3p 42.65. You notice that that's right here, and damn it if it didn't get me right in this area right through here. So as it come back down and through, the pivot point acts like a magnet. And it does. So that's just the way it is. I think, no, wait a minute, excuse me, it wasn't here. It made its movement up here, and this is where it took me out right over here. This was the movement that took me out right through here, this downward movement, not here. This is where it hadn't reached the 4P. 4P on the trade today, by the way, was 42.86. I don't believe it ran 42.86 until this upward ascension right here, where it went to 42.97, and then it went from 4p, and then I came out at the 3p mark, which was a not decent trade today. I mean, it wasn't awesome, but it was decent. I like these better. These are better. These are even the best. Occasionally, you get that 12p trade when you can pull out. In this case today, if it would have moved 12p, when you can pull out $2,500 on one trade, those are some real effing cool days. So that's what's a lot of fun about it. All right, all right, all right, all right. So that basically does it for our wave theory talk today. We used our price action, we used our basic wave theory, and we used our price forecasting, and we used the 1, 2, 3 or the 0, 1, 2 with the sweet spot. The sweet spot is how you get involved in trades. We looked at the long side today because it was a long setup on the trading day. You'd have to look back at, I think Monday was a long setup, or I forget, Monday was a good day. But anyway, that's kind of where I am with it right now. We went through the waves and the basics here. I've gave you a little bit more information today because I want to obviously have a couple of you guys in my course that I'm putting together in the Black Friday special that we got going on here. So that's about it. The futures day trading side, that's enough of me talking. We used our tick chart today. We used our daily chart. We used our 15-minute chart, and we used our 5-minute chart to help us make a decision and help us determine value in the market. It's a lot to remember sometimes, but in the end, we're going to use volume, and we're going to use velocity, we're going to use volatility, some of the other things that I talk about in future stuff. All right, that'll be it. We went through waves today. Let me get off of my screen sharing and bring me back out here again. Are there any questions on the trading day? I gave you a lot of information. It might be information overload right now. I want you to think about the two things, I guess 3 things I want you to think about today on waves are the wave theory, the impulse side, the correction side. That'd be one. You got your sweet spot in the trade itself, where you're trying to get into the trade, and then you got the third component of that is to make sure that you get inside. Well, as your scaling opportunity comes in, you take it on your biggest position when you first enter the trade as a day trader, and if you're scaling in, then you are scaling as the pyramid shape, not this shape, but this shape. So that's the 3 points of this. But the wave itself helps you get in. So that, with the combination of the Fibonacci extension, will help you forecast where this market will go. I use my spreadsheet to help me make those decisions based upon ranges that I believe the market's going. But all this stuff is all in the tools. And so instead of having all the tools on all these charts, what I do is I just have my spreadsheet, right? And the spreadsheet lets me know how far I believe this market can run. You see the 3, the 6, the 9, the 12. Those are all highlighted to let me know, well, right now I believe the market can move to 42.65 on its first movement up. Then I believe that in the next time around we can get up to 43.27, and then the next move beyond that one could go to 43.90. And then if we got the full movement within a trading day, it could make that move to 44.53. See that I'm taking advantage of the corrections that are coming in there as well. I guess you can't see my sheet. Let me screen share that for just a second. Okay, so this is my spreadsheet that I'm talking about, right? So here's your 3, your 6, your 9, your 12. And here was the entry at 42.02. And you see the 42.65. You see the 43.27. You see the 43.90. And you see the 44.53. this could have been, for me personally, should have been a really nice trading setup today. Um, but I saw something for the very first time that I hadn't seen, and I explained that on the TST recap as it relates to day 6 of the FTP, because I'm still fairly new at taking on the small account one contract trading. So this has been a learning experience for me overall, to scale this down, my trading strategy down into a day trading strategy, so that I can work inside the day trading realm. And it's still, it's not perfect. Nothing's perfect. Like I said before, in any of the trainings that I've ever talked about, um, that you get your greatest learning experiences from your mistakes. And your mistakes, as long as they don't kill you, and as long as you don't blow your account out, and you live to fight for another day, right? Live to fight another day. You live to fight another day. So like the Adam Sandler and the Waterboy, right? That's what I always think of when I reach down to that 47 tick mark, that or you get close to your max daily loss. Any day you reach down to that max daily loss, you have to look at it like that was a learning experience. What did I do wrong, and where can I improve upon? So um, when I look back at my trading performance over the last 16 days right now, I'm 13-3. So, 16 trading days in, and I believe that's like so 16 trading days in from the combine through the FTP right now, and I'm 13-3. I'm still considerably up overall on all my trading that I've done at Top Set Trader. But you run into occasionally you run into something you haven't seen before, and it kind of throws you for a loop. And then now I've got a plan against that loop. So now it's but that's what trading is all about, is learning from your mistakes. You're always learning. And that's why, when someone says they're a master trader, I grab my wallet and run the other direction. I'm physically up and moving the other way quickly, because I don't believe that anybody living is a master trader. I firmly believe that. The only way that you can become a master is if you're dead and your work is showing for yourself at that point. So we're all journeymen as it relates to trading. We're all in the same boat together, you might be an apprentice and working your way up to journeyman, and working your way up to master. I mean, I'm working my way from journeyman to master, but I'll never get to master in my lifetime. It just won't happen. And I firmly believe that. And as long as you have that philosophy as well, you're never sitting back and thinking to yourself that the market will, I have to always be right type of mentality. You're going to have your setbacks. You're going to have your area that's going to send you on soul searching, as I like to call it, and it takes you down this path. But the path that you go down to is also your greatest learning experiences, as well as you take what you have learned and you apply it. Right? It's like when I look back at my trading, I saw something that I hadn't seen before, and I printed it off. Right? Let's bring that up here. You see this clearly on my blog post today. That right there is something I hadn't seen on the inventory report, and it had me thinking which way to go. And I sat on my hands, where I could have really, I should have bracketed out the trade and taken the position. you know um, Trust myself and trust my system. So yeah, the practice account just crushes it, right? But the live FTP account, I'm like, wow, what the heck did I just do? So it is, with the way it is, sometimes you get in the way. And if you can get yourself out of your way in your trading, you can make a lot better trading decisions. All right, are there any questions? And I've given you a lot of value, hopefully, today. And if you think so, just let me know. And here in the comment box, are there any questions? Let me open up the chat for questions. I lost everybody today. I probably, yeah, waves can be kind of confusing. Um, so when you're looking at the wave and yeah, waves are confusing, yes. It, but it's a forecasting tool. I use the 0, 1, 2, 1, 2, 3 to help me get into the trade, right? And you see that I make my decisions based on the highway as well. The highway helps guide my thought process as I'm making my trading decisions if I want to be long or short. And go back and look at that line that divides through, right? Any other questions right now? Oh, you're welcome. Glad to be able to help out. Yeah, I explained that earlier, right? The my wife cut me now. Yeah, ha ha ha. It was asked, one of the questions here is what happened to my face, and I cut myself with a razor. Oh, yeah, highly recommend Top Step Trader. The question is, what's Top Step Trader? TopStepTrader.com. You know, just send me an email, fire me off. I'll be more than willing to explain it to you. But you can go to TopStepTrader.com. There's 14-day free trial out there for you to take advantage. Basically, the long story short of that company is that you are working your way to be a funded trader so you can do the OPM, trade other people's money. Trade the funded account, and it keeps you accountable. You have a record of everything. Um, that you just go topsteptrader.com. Here, let me throw it in here and see if that will throw out here. Send that. There you go. All right, so well, we still got the same offer if you haven't seen it. Let me go ahead and offer this back out here. It's our free CL pitch strategy. I think most of you guys have taken advantage of it. It's in the room right now. But there it is for you. Any last questions as we wrap up today? We're up over an hour today. Today is a little bit harder with waves. Waves gets into some of the theory, and that's why it's called a theory, not a principle, by the way. I mean, excuse me, a law. There is no law. There's no wave law. It's called the wave theory, the wave principle. There's no law to the wave. The wave is just like the beach wave. You know, you just don't know how far the ocean is going to move up, because occasionally you get that thing that happens at Thailand a few years ago, that during Christmas Eve, that unfortunately that wipes out all that land. You know, you just never know how far something's going to go, but it always comes back to seek its level. Any last questions at all? If not, we're going to wrap this up. All right. I don't see anything. Well, yeah, you're welcome. You're welcome, Tom. Yes. It's a passion of mine to educate, to hopefully to help you become a better trader as well and win more than you lose. I mean, I can't remember last time I had the guy I just asked about my 2 trading losses in a row. Yeah, I can't remember last time that I had 2 trading losses in a row. Will I win my FTP this time, or will I have to go back in the combine? I don't know yet. At 4 trading days, it's completely doable to make and bust it out. But there's some unknowns right now. I got 4 trading days: Tuesday, Wednesday, Thursday, Friday of next week. Hopefully, coming into Thursday, I will bust it out, and Friday will be an easy day. So that's kind of how I'm looking at it right now. Have 4 winning trading days right now. Regroup and take the valid, to trust myself, trust my system. Don't let myself talk myself out of a valid setup. All that stuff that goes in my head knowing that the market is in the down, and that just comes back to a lot of my money has been made on the short side in the last 4 or 5 months of my trading career, because we've been in a downtrend. The overall overwhelming trend, as we talked about in the last, is that the very first video we talked about trends. We talked about, when we talked about trends, we went and talked about them, and when we were talking about trends, the overwhelming trend right now as a day trader is the short side. So, to me, to take 75% shorts and 25% longs is kind of the way my thought process right now. It takes a lot for me to want to take a long signal. So, but it was there. I should have taken it, and it's the woulda, shoulda, coulda that files away into the trading information that I put forward and put out. All right. That'll do it for the day. God bless. Take care. Have a very happy Thanksgiving. If there's any questions at all, just feel free to give me an email. Ring me up at david@123daytrade.com, and I'd be more than happy to answer anything. And I look forward to next week's training. Just so you understand what we're going through, it'll be the last of our 4 weeks in the beginning course. And we have dealt with the last 3 things that we've dealt. Well, we dealt with trends last week. We went price action with candlesticks, and then we looked at trends last week. We looked at waves today, and next Wednesday's training at 3. We're going to 3 p.m. Eastern. We're going to be looking at don't tell me it's on top of my support and resistance. The support and resistance, and tying in the pivot points. All right. All right. Take care. God bless. Take care. And we'll see you on our next time together next week. Bye for now.